Thank you for watching ENECHANGE's FY2025 Q2 financial result video. I'm Tomoya Maruoka, CEO of ENECHANGE. Here's an executive summary of our results. First, here's the summary of the first half performance. We recorded our highest ever operating profit of 323 million yen in the first half, and adjusted EBITDA was 346 million yen. Adjusted EBITDA reached 346 million and nearly achieving the full year forecast of 350 million. This indicates a very strong first half performance. Our FY25 outlook was revised upward once again following Q1. This time we presented a forecast ranges of 350 to 450 million yen. The key drivers behind this strong performance were, firstly, a solid 9% year-on-year increase in the recurring revenue from electricity switching, especially strong on the corporate side. Secondly, a strategic shift in our customer acquisition approach for the household's electricity switching business, emphasizing profit margin. Specifically for the offline acquisition segment, we focused on and maintain CPA levels that ensure the profitability. As a result of that, advertising and sales promotional expense declined, leading to improved profit margin and a much healthier business structure. In a SaaS and system development segment, the completion of the large-scale project in Q1 led to a significant increase in revenue and profit contribution. Overall, we believe this first half performance demonstrates our entry into the profit expansion phase, as we talked in our midterm plan. The latter half of this page lists growth initiatives going forward. For the electricity switching, we have launched a major overhaul of our comparison site, which serves as our main customer interface. We call it, it's kind of our face of the company. Over the past 3 to 4 years, only minor updates were made to this side. But now, with the shift to ENECHANGE 2.0 and organizational reforms under one ENECHANGE concept completed, we decided to proceed this full revamp. The background of why we do this is that although the business is now more profitable due to the acquisition strategy shift I just mentioned earlier, sustaining growth speed while maintaining profitability will require broadening the customer base. So hence, we plan to enhance the profit platform by using AI and our proprietary assets such as usage data and user reviews and so on, to make switching easier and more attractive to mass market consumers. Secondly, on our new core system for the new entrants, we've launched an agreement with our first customer and have begun development. This is a significant step forward, and as a detail later, the CIS market is estimated to about 90 billion yen in Japan. By targeting the new entrant segment of that, we aim to make this our new next major growth pillar. Other new solutions area are also making progresses. For electricity procurement support, we closed the 2 additional non-fossil certificate matching deals in Q2, showing the steady traction. We'll cover this more details in later pages. This is a summary of our first half profit and loss statement. Let's start with the bottom part of this, highlighted the blue box. The operating profit for the first half of 2025 was 323 million yen, and adjusted EBITDA reached 346 million yen, both record height. Reflecting this strong performance, we revised our full year adjusted EBITDA forecast upward again to range of 350 to 450 million yen, as I mentioned in the executive summary. The other highlights are shown in the box 1 to 3, but I'll focus on the 2 and 3 here. As noted earlier, our shift towards a more profitability-focused acquisition strategy enabled better control of the advertising and promotion cost, which you can see in the box 2. And also, as shown in the box 3, Our adjusted gross margin, which is calculated by treating advertising and also the sales promotional expense as a part of COGS, rose from 46% to 51% of sales, which making a significant improvement in the quality of our revenue. This chart provides a more visual representation of our profit expansion phase. That is shown in the Q1 as well, and here the Q2 version of that. The top half of the chart shows the business profit before headquarter cost. The bottom half shows the headquarter cost. The difference between the two equals the operating profit, as you can see in the bottom. The business profit more than doubled year-on-year to 790 million yen-ish, which is an improvement of the 468 million yen. This growth was driven by, firstly, the profitability-focused acquisition strategies we mentioned earlier, and secondly, the growth in the corporate electricity switching, and the third is the contribution of our SaaS and development businesses. Meanwhile, as you can see in the bottom, the headquarter cost decreased to 5% year-on-year, which equivalent to the 23 million yen, thanks to stronger cost discipline. As a result, operating profit hit a record high of 323 million. Below operating profit, we recorded a net loss of 229 million yen due to equity method losses from Mirai's ENECHANGE, which is our EV charging joint venture. As shown in the right-hand side box, the maximum equity method loss is capped at 540 million yen. So no additional losses are expected beyond the 540. If you look at our balance sheet, there are no major changes to the balance sheet. Our financial position remains stable, and we plan to selectively invest our cash with a focus on the improving capital expense efficiency, including ROIC and ROE. Here is this year's full year outlook broken down by quarter. The two key points are shown in the box 1 and 2. As per box 1, although the first half adjusted EBITDA was 346 million yen, the full year forecast wouldn't be the double of that. This reflects the absence of the one-time boost by the large SaaS project in the first half, and also the anticipated investment in growth, including hiring engineers based on our pace of the profitability generation in the later half of the year. And as you can see in the box 2, the Q4 will be the major profit contributor for the second half, because the Q3 tends to be weaker due to the stable seasonal weather, which leads to the stable or weaker demand of the electricity. From here, we'll go through the key KPI by solution category. The total revenue grew 15% with the SaaS development revenue increased significantly due to project completion in Q1. And as you can see in the right-hand side of the chart, the recurring revenue increased 7% year-on-year, mainly driven by the 9% growth in electricity switching. So first, let's look closer at the electricity switching growth next page. Here's the household electricity switching breakdown. As shown in the box 2, user count declined 7% year-on-year. This was primarily due to the profitability focused shift away from low-margin customers, so it's an intentional shift. Also, this period saw strong acquisition of short-term contracts that didn't convert into recurring users. Meanwhile, ARPU increased 14% thanks to strong performance from ancillary products. So overall, the recurring revenue growth showed to 6%, but that reflects our strategic shift. We'll continue to maintain profitability while also accelerating growth. So starting with the major overhaul of the switching sites, as I mentioned earlier in the executive summary, we'll continue to focus on the re-acceleration of the growth in the household side. For the corporate electricity switching side, total revenue grew at 11%, mainly driven by the increase of the number of the corporate recurring customers, which is 10% growth. And ARPU was only 1% growth, which due to the fact that the summer price of the electricity was lower than last year. So we offset this effect by increasing the size of the customer. So the main reason of the strong corporate electricity switching performance is mainly driven by the number of the customers. Let's look at the market condition. As I mentioned just now, the electricity price this summer was slightly lower than last year, as you can see, if you compare the gray part of the chart versus the orange part of the chart, which was the headwind on our ARPU, as you can see in our corporate performance. But currently, if you look at the closer in the latest data points, and the price are trending back towards last year's level. If we look at the market condition from the customer acquisition by new entrant electricity retailers, which is our main customer's perspective, as shown on the left side of the chart, the contract volume continued to rise for the new entrants. And the chart on the right side is interesting that the net inflow from major electricity companies to new entrants are increasing to 150,000 in Q2, continuing the recovery trend. SaaS and system development KPIs, overall revenue grew at 30%, driven by large project completions, and recurring revenue grew at 3%. While we maintain the moderate growth of the recurring revenue from our existing solutions, we aim to scale recurring revenue further with the new solutions like the core system for the new entrants. For our EV charging joint venture Mirai ENECHANGE, the destination chargers numbers are nearing 8,000 units, and the total charging time grew steadily 16% a year, quarter on quarter. Now let's move on our growth initiatives. As mentioned in the executive summary, we have started a major revamp of our electricity switching comparison side, which represents the face of the ENECHANGE. In recent years, we haven't been able to undertake a large-scale overhaul of this switching side. However, with the arrival of the AI era, as shown on the left side of the chart, and the need to further expand the switching market, we believe it's essential to better engage the mass market, including people who have never switched electricity providers before. This mass segment may not necessarily have a high interest or literacy in electricity, therefore making the switching experience as easy and accessible as possible for these users is the key. From a profitability standpoint, we see our recent strategic shift in household electricity customer acquisition as a positive development. At the same time, to ensure continued growth going forward, revamping our switching site has become a strategic priority. As noted in the center column, we are planning to add the features such as AI chat service that allow even mass market users to easily ask questions. And we also plan to leverage our unique data assets, including user review, switching performance, and electricity usage data in combination with AI. And this will enable us to offer highly personalized and easy to understand recommendations for electricity plans, along with improvements our marketing strategies. We aim to make a substantial progress of this revamp within FY2025, with a full release target for the first half of FY2026. Now let's look at the progress of our new solutions. But before going into the detail, I'd like to explain the strategic reason why we started these new solutions with this chart. But even before going to this chart, stepping back, first of all, we offer services across the energy value chain, as you can see here. So from the electricity procurement to the customer support, we cover all the electricity value chain. And now we have started our two new solutions, core system for the new entrants and electricity procurement support. As you can see here, which is circled by a red color with the new icon here. In order to strengthen a overall platform value by connecting different services. So we listed the key points here in the boxes here. So firstly, as shown in the blue box in the right-hand side, the core system for new entrant electricity retailers can be integrated with our existing SaaS products and provided as a bundle and end-to-end solutions. And secondly, as illustrated in the yellow box or orange box in the bottom right, by connecting the core system for new entrant with our main solution, electricity switching, we can seamlessly link customer acquisition and switching proposal data. This enables us to provide a more personalized electricity plan recommendations to customers with the new entrants that adopt our core system. Lastly, as you can see in the green box on the left, our electricity procurement support service not only assists in the procurement itself, but also creates added value when combined with our electricity switching solution. By leveraging data from retail and sales activity in the switching service, we can support optimal power procurement. That's one. And conversely, secondly, the use of the procurement data to enhance customer acquisition strategies, thus generating the additional value by integrating those services, procurement and the sales functions. So with that background, the strategic context of our new solutions, let's look at the progress of the new solutions. So the first, regarding the development of our core system for the new entrant electricity retailers, we had previously stated in the Q1 that an agreement was expected soon, and now we successfully reached the agreement with our first customer, and now we began development. This system will first be delivered to our initial customer, and we aim to expand the sales of similar package. We aim to expand sales of this solution going forward to other customers as well, and positioning this as our next pillar of growth. So now let's look more closely at the core system for new entrant electricity retailers in terms of the market sizing and also the target segment. The total budget for the IT system by electric companies is estimated around 180 billion Japanese yen, of which 90 billion is estimated for a core system, or we also call CIS market, or more. This means that the CIS market is basically the fraction of yen per kilowatt hour for the electric companies, and indicating a sizable and meaningful market opportunity. Within this market, we aim to offer our core system to approximately 50 to 60 large and mid-sized new entrant electricity retailers, which is in the middle column of this chart. And they are positioned just below the top 10 major players. For these companies, they do not necessarily require the same high-end, highly robust system capable of processing more than 2 to 3 million of customers as the top 10 electric company does. Instead, there is a need for core systems that are both reasonably priced and functionally sufficient for these new entrant electricity retailers. Even for the smaller regional new entrants in the far right of the chart, we are also considering providing a lighter version of or SaaS-based option of the system. As listed in the above, regarding our system under development, as you can see in the four small boxes, in addition to the CRM and also the billing component, which typically included in the CIS, as you can see in the second box, we planning to include SFA, Salesforce automation, as a part of this package. This will enable seamless integration from customer acquisition through the customer management. Next, let me provide an update to the second new solution, electricity procurement support. This solution, shown in the middle section in this chart, serves as a matchmaking service between electric providers with the surplus electricity or non-fossil certificate and those with the shortages. For electricity procurement matching, we have already signed basic agreements with around 15 participating energy companies, and we are progressing in individual matching discussions with them. And regarding a non-fossil certificate, while we closed our first deal in Q2, we successfully concluded the second and third transactions in Q2. Which translate year-to-date total certificate amount is 150 million kilowatt-hour. On the next two pages, I will explain how we aim to further expansion of this solution. Starting with the market environment, highlighted in the box at the lower right of this page, the tailwinds, such as the obligation to secure supply capacity for the electric retailers, are expected to drive the expansion of the mid to long-term transaction market, which is promoted by Japanese government, and also the electricity future market in Japan. With that favorable environment, here's how we plan to expand the solution. First, for the electricity procurement support function at the top box, we are currently in discussion with about 15 companies, as I mentioned, but our goal is to grow this number to 30 to 50 companies. And once we reach that level of number of customers, we intended to go beyond the voice brokerage and move towards providing an actual transaction platform. Thanks to our internal engineer and design teams, we believe we can build such a platform quickly and in an agile manner. We are also offering ENECHANGE Insight Market, which is in the bottom of this chart, which is a market analytic tool for electricity pricing. So we plan to further enhance this by adding advanced analytical features and integrating it with the above-mentioned transaction platform to improve convenience for the user of our electricity procurement platform. So that concludes the explanation of our first half result. Lastly, here is a recap of the midterm plan. For the first half of FY2025, we achieved an adjusted EBITDA of 346 million yen. For the full year, we aim to reach to 350 to 450 million yen. So we think FY2025 is off to a good start. In light of this, we also plan to make a selective investment during FY2025 to support future growth based on the pace of our profit generation. So we will continue to steadily progress toward our midterm plan target of 1.25 billion yen in FY27 or even further. So we appreciate your continued support for ENECHANGE, and thank you very much for watching this video.